Let's get on board then. Naveen Mathur, he's Associate Director, Commodities and Currencies at Angel, and he joins us live on the show. Naveen, hi, good to have you. Let's start with the crude oil prices first, and we've seen some gain come back onto that one. $40 and seems to be meandering around that. What are you watching out for? Has it reacted to Fed already? Is it the dollar, or is it really the which would be the biggest factor?
Definitely the April 17th meeting would be the biggest factor, Manisha. The whole news of this OPEC and non-OPEC members meeting up on the April 17th is critical, and therefore we have seen prices from about $30 levels coming up to around $45 levels too. So the expectations are building up from this particular meeting, and if there is a positive outcome, which the markets are expecting, the markets on the crude oil can even touch $45 to $50 too with a knee-jerk reaction. But for the yesterday and today's trading, yes, we have seen prices rebounding and then coming today back to the levels of $38, $39. I think it's more to do with currency and the dovish stance which was taken by the Fed, and hence the markets have reacted to the weak dollar. And with the weak dollar, we did saw prices jumping up and then coming down on the profit booking. The inventory also played a critical role. But overall, I feel in the medium term, keeping aside this April 17th meeting, say for example, the prices would hover at around $40. And I think there would be subdued volatility because of this particular meeting. There would be subdued, the people would be waiting and watching the outcome of this particular meeting. So therefore, there would be subdued activity on the crude oil counter. But intraday, we would go for a selling proposition that the selling can be initiated for the crude contract on the April month at MCX at around 2,620 to 30 levels. The stop loss at around 2,700, and targets on the downside can be seen in a range of around 2520 to 2530 levels.
How are you looking at the natural gas prices? Because we've seen some support in the distillates and diesel prices in the global markets. Is that in any case impacting the prices here? Yes,
it is impacting. The trend remains slightly bullish. It's trading, the natural gas in India is trading at around 132.5 levels or so. I think the support and the resistance levels are around 126 in a medium term, and the resistance level would be around 137. I think the stance is on the positive side, and therefore the strategy would be, if somebody wants to go long, buy on dips at around 130 with a stop loss again at 26, and targets on the upside can be seen in a range of around 135 or so.
Let's talk about the precious metal space, and that seems to be closing this quarter as well on a very positive note. Gold actually seems to have outperformed many other asset classes, but do you see this strength holding?
Manisha, yes, I think to a certain extent we have seen the year start off as a different year for gold. From the last 3 years, it's been a negative performer, the worst of the performers one of the asset classes has been. So 3 years were kind of not too good for the gold or the asset class, particularly the precious metals per se. What we have seen from January is the safe haven demand which has come in. Although there were crises earlier too in these last 3 years, particularly with respect to Greece, with respect to China, but then gold didn't respond in the way of a safe haven demand. I think with the crude prices moving upside, plus there are concerns with respect to terrorism across Europe, and the weak dollar has helped to get the safe haven demand to come up back, and therefore we have seen prices hovering at the highest level at around 1280 or 1285 if I'm not wrong. So we have seen correction of prices to a level of 1050 to 1100 levels. We have seen prices in 3 months to a level of around 1280. So I think it's holding at around 1230, $1240 levels, where it's gonna be consolidating at around $1200 to $1250 levels. Any new trigger on the safe haven or the China factor or the kind of a weakness in dollar will push the prices slightly upside, but not too much on the bullish to be with kind of returns which we have seen some years back. So I'm not that bullish, but yes, there's a positivity building around gold and the precious metal for the safe haven and the inflation hedge demand. So it may continue to be slightly on the upside to $1250 to $1270 levels. So that's the medium and the near-term outlook. If somebody wants to trade on gold for the intraday, the buying position on the April contract on the MCX would be a good start at around 28,550 levels, stop loss at around 28,400, and targets at a level of around 28,850 to 900 levels.
Also, how are you looking at the silver prices? Because you've seen a bit of a dip coming in for that one. Is it a good time to buy it? Do you see more gains coming in there?
Manisha, silver is a precious metal and the industrial metal too. It copies both transitions. So what we have seen over a period of time is a bounce back which was coming up in base metal because of the China questions on stimulus, and that has been assured that if the economy needs, the state and the bank, the central bank would not mind going in for further stimulus. So overall, and that too with a weak dollar, we have seen prices of base metal bouncing upside from sub 5,000 levels, $4,400, $4,300 levels for copper. We are seeing prices stabilizing at around $5,000 levels on the LME. So I think it's time for consolidation for base metals, and at the same time the consolidation is also happening at around $1,240, $1,250 levels for gold and the precious metal. So I think a little bit subdued, but overall trend slightly bullish for the near to medium term. The prices are hovering around 36,900 levels. So I think overall 36,600 levels. So overall the markets remain to be positive to an extent of 36,900 level. So buying position on the intraday would do good at around 36,300 to 400 levels with a stop loss of around 36,000, and targets on the upside can be seen in a range of around 36,900 to 950.
Fair point that. You also touched upon the base metal space where you said that the copper prices can see some volatility happening for that one. On one side, it is the China concerns, and for last couple of months, we actually have seen yuan prices gain up. It's a second straight month of rise coming in there. Would you say that that scare for now has been factored in or eased off, and going ahead, base metals actually can start opening a new quarter here?
I think so, Manisha. Not to a large extent on the high probability, but then to an extent, definitely, yes, the copper prices may touch $5,100, $150 levels. And Indian markets, we can expect the prices to be at around 330 levels or so in due course of time. But technically for the intraday, the market seems to be slightly bearish. Therefore, the strategy for the intraday would be to sell the copper contract on the MCX for the month of April at around 324 to 325 levels. Stop loss to be put in for this trade at around 329, and targets on the downside at around 319 to 320.
Noted all those levels. Thank you so much for joining us, Naveen, and giving us all those strategies and those commodities.
Thank you very much.
We'll let you go at that. But before we end the segment, let's talk about some agro commodities as well, and what a day it has been for the sugar prices, where you saw the prices as well as the sugar stocks gain quite strongly. The sugar production is expected to drop for a second year in India on water shortage.